Given that no talks are scheduled as of yet, we continue to see no real resolution in global uncertainties. The Fed doesn't meet in about a month. Is, at least for the short term, just going to get worse from here?
I think that volatility is definitely sweeping the market, and for a lot of the reasons that you just mentioned, we have this massive level of uncertainty now with trade wars. You know, it's really since August that we've seen the S&P 500 off of all-time highs, or highs from the year anyway, of 5 to 6%. And you know, he dialed that back yesterday, and the market quickly reacted, but it was sort of not enough, it seems. And now, you know, the further comments that just highlight the continued uncertainty and the geopolitical issues that are going on with the protests. You have Hong Kong, Argentina, all of the issues going on in Europe. I think it leaves the market in a state of near-term panic, at least.
Do the fundamentals, though, justify this panic?
So, you know, I've been thinking about this today in the inverted yield curve, right? We came into the morning between 6 and 8 a.m. We saw the inversion, and then we sort of closed maybe half a bip to a bip off, and now we're a bip or two off. So it's sort of, you know, not inverted at the moment, but it's pretty close where you could almost argue that, you know, it is a recession sign. However, if you take a step back, the consumer remains strong. You know, earnings were decent. They were better than expected. We have to see what happens in the next quarter and sort of, you know, how that progresses. The consumer is still buying. Retail sales were decent in the U.S., so we're kind of like the nicest house on the bad block, but there are some good things keeping the U.S. market up and keeping investors interested in equities.
More broadly, though, it has been a very, very long bull run, I think the longest in history. It does have to end sometime. Are you seeing some evidence here of investors just taking some profits and bunkering down?
You know, does it have to end, or is it a self-fulfilling prophecy because it's been going on for so long that it has to end? I agree that we have signs of slowdown. You know, earnings are certainly slowing down. We're starting to see those high single digits that we've seen and potentially fears of further pullback. So investors, I think, are certainly reactive to a lot of the headlines in the market. We've definitely seen investors, you know, looking to diversify portfolios this year. So I think a lot of them were sort of overweighted to growth and cyclicals and things like that. And now we're seeing a lot of play in gold. We're seeing a lot of play in, you know, 20-year plus treasuries, late cycle performers, things like staples and utilities. So investors, I think, are certainly, you know, skittish and diversified and looking at the market with some skepticism right now.